Let's kick off on the oil shock that we've seen on top of what's been going on with equity markets and, of course, the coronavirus. How much more serious has this made the outlook for the global economy in your opinion?
Well, I think the global economy definitely is under a bit of stress. We felt it when China was impacted by the shutdown on the back of the virus. And at that point, people were saying, whether China could contain it. Well, they did in a sense. Cases in China is falling, but it's a virus. It travels. People travel, and the virus will travel with them. And now it's arrived in Europe and it's arrived in the US. And definitely, if they basically embark on the same kind of strategies that China used, then we are going to see a significant fall off in growth, at least for the next few quarters. Now, if we get a handle on it by the middle of the year, most people are kind of forecasting that maybe in the second half we might see a bit of a snapback. I'm taking a very cautious view of it in a sense that I say basically 2020 is a bit of a write-off because by the time you are able to constrain it and by the time people get the confidence of going onto a plane or traveling or just going out shopping, it'll take time. So, and as such, consumer spending and even corporate spending is going to definitely take a back seat in terms of fighting the virus.
Absolutely. Well, the market is really hinging the recovery on significant financial stimulus coming through. If you look at Asian markets today, we are under pressure given that we didn't get any solid announcements out of the Trump administration, as had been promised yesterday, earlier on this morning, about a potential stimulus package there. What is your view on Asian markets with, of course, all of this stimulus in the pipeline and, of course, the volatility that we've been seeing?
No, I'm actually a bit more optimistic about Asia rather than, say, what's happening in Europe and maybe in the US, because we were in the forefront. And now if you look at, as I said earlier, you look at China's numbers and Korea, it seems like we've gotten a better handle on things. Now, that does not mean what happens in the US and Europe doesn't matter. But in a sense, with all this liquidity sloshing around and the fact that we have governments now providing fiscal stimulus, money is sloshing around and it's got to find a place to go. And I do feel that it's a bit of a tug of war. On one hand, you have the real economy, which is getting impacted by what's going on with the virus. And then you have the financial markets, which is getting influenced by where interest rates are and what governments are doing. So that's why when you look at, example, the China markets, actually they're best performing right now not because the virus didn't have an impact on the real economy, it did. But the Chinese were very aggressive in terms of monetary policy, in terms of providing funding for the SMEs, in terms of making sure the economy continued to function while they fought the battle with the virus. Now, China is beginning to reopen again. Yes, it will take time. But at least it didn't fall off the cliff.